Welcome to the November 3rd, 2025 advanced report for McGowanGroup clients. We are in a new bubble, and what are intelligent investors forecasting for 2026 as a result? It's a very thin market. You've got 10 to 12 companies driving the S&P 500 at this point. It's a 17% gain for the year. Now, think of the thin market at the top and everybody's chasing tech. Don't forget that. This is very important when you start to dissect 2026, 2027 possible outcomes. Well, that's a huge gain. So remember that number, 17% at this point. Why? Because now we're going to say, is this justified overall? Because that's a record valuation. People are paying more for S&P companies than ever before. And there may be some solutions built into that. First, S&P 500 earnings growth. It actually improved a little bit over last week. So all the companies are reporting their third quarter earnings. And as they come in, McGowanGroup Wealth Management logs them. By the way, I'm Spencer McGowan, your financial weatherman and founder, McGowanGroup Wealth Management. We're a team of 10 serving affluent families right from the Crescent in Dallas, and we serve the institutions associated with those families. Now, this is near 16% earnings growth over last year, and the S&P 500 is up 17%. That seems pretty reasonable intuitively, because it also means based on profits, we're about where we were last year because profits went up almost that 17%. There's something else in here that I noticed. Sales growth, 9% so far for the third quarter, and you've got over half the companies that have reported so far. What does that tell us? Inflation is 3% and sales growth is 9%. What is GDP growth right now? Economic growth, according to the Atlanta Fed, 3.9%. Now, you've got the thin market at the top. Everybody's saying Nvidia's worth $5 trillion, Apple's worth $4 trillion, Microsoft's worth $4 trillion. Which one of those do I buy? Google had a great earnings report. Everybody's looking in the same category. Everybody's thinking about the same thing. AI mania, right? Artificial intelligence is going to change the world. I'm going to have a robot empty my dishwasher every morning and then load my dishwasher every evening. This is going to be great, right? So I can't wait for the robot to do that. That'll free up some free time. And we could probably do an extended YouTube. Here we go. What's this? 16.5% earnings growth. Wow. Well, sales growth is a little under 6, so we'll say almost double inflation. This is the Russell 2000, also referred to as small caps. Well, we're going to also look at medium, because medium's more reliable than small. When things hit the fan, you don't want to be in the small, all right? But anyway, is this justified? We're going to research that at McGowanGroup Wealth Management, but I also have a category that nobody's looking. You got the thin market at the top, but you've got a thick market down here in great dividend companies, energy infrastructure, and great choices. We look at the small energy companies, earnings growth was 60%. All right, so I've got Alex and Andrew researching what do we do about this, because this appears to be more attractive than paying $5 trillion for Nvidia. All right, here we go. Top 10, bottom 10. This is the last 90 days. This gives you a read on who's winning and where the money's flowing. And where's the money flowing? It's all about tech. Wow, when everybody's looking in the same place, maybe you ought to take a step back and say, maybe I should build some tactical safety. And I'm going to show you why here in just a second. Now, Intel, 99% up. Finally, they woke up. For 5 years, they've tortured shareholders with just crappy results, and they got better. And so they have a turnaround plan, right? 95%. Western Digital, Micron, 95%. They figured out AI needs a lot of memory. Seagate, what is all that? Well, that's AppLovin. The top 5 Lamb Research, top 6. Top 6 are all what? Tech, right? And what's it leaving behind? Fiserv, a payment processor, they fired their CEO, went down 52% in 90 days. That's not good. Kenvue, a little problem with Tylenol and autism there. And we've got CarMax down 28%. They're losing the war to eBay. And who's the other one? Carvana. So anyway, you can see there's bottom. But there are some attractive bargains that are out there that we'll be happy we own over the next 5 years that are getting put into McGowanGroup Wealth Management fiduciary portfolios for our clients. That's why you ought to be a client. Go to networthradio.com, fill out the client questionnaire. All right, what's this? This is an exchange-traded fund that we have in the portfolios, not a recommendation for your portfolio till you come down and get a plan, right? An attractive return compared to the Dow year to date. And these are companies with lots of free cash flow. Remember last week's theme? Who is writing checks? OpenAI. They're not public, so we can't buy them. But anyway, who's writing checks? A lot of these companies are spending too much on capital expenditures. And who's getting checks? Wow. We asked that question and we said, but who's getting checks and who makes money right now and makes more free cash flow than their capital expenditures? Well, this is a well-researched, low-cost exchange-traded fund that does just that. You see there's good choices out there where you're not chasing the same thing as everybody else. Remember April, boom, everything went down. That was an instantaneous, tariffs going to cause a big recession, a big collapse. And a lot of the tech from that point is already up 100%. Well, let's start looking at other categories, and I'm going to bring you the updates. Next week, we'll include some energy infrastructure updates on the pipelines. Thank you for tuning in. Go to networthradio.com. You can contact us there. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.